Hey YouTubers, so I wanted to do this video about an introduction to investing. However, I think I'm going to have to push that video to a little later date. Reason for that is because there's finally something else that has come into the news that's a little bit different to the whole pandemic that's going on. Now, what is this piece of news? This news is the fact that crude oil has been trading at a value less than zero. This means that crude oil has fallen around 250%. Now, this is the first time ever in the history of the price of oil that oil has been trading at a negative value. Now, I don't know if you're like me, but I was thinking that, hey, the world is going more green. We've got Tesla doing amazing. We've got loads more electric cars coming into the world. Now, why is oil such a big thing still? But as it stands, oil is still used for pretty much everything in some way or form, which makes it one of the biggest commodities in the world. Now let's try to put this into perspective. With anything to do with commodities, it's always supply and demand. Now, in this situation, basically the demand has reduced drastically and the supply has increased or stayed the same. So if we look at what's going on in the world right now, a lot of people are stuck at home. Therefore, they're not using petrol as much. So we've seen probably about a 50% reduction in petrol consumption. Now, with all of the airlines being grounded as well, we've seen probably about a 70% reduction in jet fuel used as well. Also, a lot of factories around the world have either closed down or working at a lower level. This means that the demand for oil is just a lot less right now. Now, with oil trading at a negative value, that means that traders are paying people money to take oil from them. Now, this doesn't mean that we can just head down to the nearest petrol station and ask Esso to pay us some money to fill up our cars. I mean, that would be great, but it doesn't quite work like that. And there's a lot of other factors involved in the economy that will bring the price of petrol down. Now, we should see a drop in petrol prices, but it doesn't mean that it's going to be correlative to the actual value of oil. Now, to understand this fully, we need to dive a little bit deeper. We need to look at the oil industry as a whole. So when I was doing my research, I saw that there's probably three main things that we need to look at. One is oil extraction, two, oil reserves, and three, oil consumption. So if we look at the oil extraction, there's two different main ways of doing this, and that's on land and on sea. So if we look at the top three countries that are extracting oil, we have USA, Russia, and Saudi. And we have USA extracting around 12 million barrels a day, and then you've got Russia doing around 10 million, and same with Saudi doing around 10 million a day. We then have the oil reserves, which is keeping hold of all of this oil that is being extracted. The three countries that have the largest oil reserves is Venezuela, Saudi, and Canada. Venezuela has around 300 billion barrels in their reserves, Saudi has about 260 billion, and Canada has about 170 billion. Then we have the oil consumption. Back before this pandemic, the whole world in total was using around 100 million barrels per day. Now, looking at these numbers, it seems like, what's the issue? We can still create more oil if we've got that much level of reserves. However, most of these reserves are completely full. And in order to create more reserves, this obviously costs more money. Unlike commodities like gold, where you could probably buy a gold bullion and then dig a hole in your garden and keep it there, you can't exactly do that with oil. You can't buy some oil at this really low price and fill up your bathtubs or swimming pools that you may have. In order to keep oil, it's actually quite a costly process. And the companies that are involved in this have obviously increased their prices as well. So right now, in the situation that we are at, the supply and demand has switched to the people who are creating reserves for oil. Therefore, it's not very profitable to hold oil right now. This is why we saw that negative value of oil on WTI. Now, what is WTI? WTI is West Texas Intermediate, the benchmark for US oil price. Now, with it being West Texas, this means that it's a land oil extraction. It's a lot more difficult to create more reserves for land oil extraction. Now, if we look at the European and international benchmark, which is Brent crude oil was trading at around $30 when WTI was trading at minus $40. Now, I've just mentioned a whole load of numbers, but what does this all really mean? Now, basically, we have countries like Saudi Arabia and Russia who are able to create a barrel of oil for around $10 per barrel. Then US, it costs them about $20 a barrel. So what does this all mean? Basically, the countries that can produce a barrel of oil at a lower price than some of the other countries, they're able to extract more oil to drive out those other countries where it costs a lot more, making it not profitable for them to carry on extracting oil. However, this then becomes the problem of oil reserves. Now, when all the oil reserves are completely full, there's nowhere to hold this oil. And at the same time, with our oil consumption worldwide falling drastically, we don't know when we're going to be able to utilize the oil in order to fill up the reserves again. And this is where we look at how oil is actually traded in the market. And basically, the oil commodity is traded in a futures option. Now, what's a future option? It's basically the right and obligation to buy or sell a stock at a specific price at a specific date in the future. So essentially, WTI trading at this negative value basically means that traders are putting a value of a negative number for selling those barrels of oil during the month of May. Traders have identified that they are not able to hold the oil that is being created in the reserves due to the reserves being completely full. Therefore, they're willing to pay other people to take the oil from them because their refineries just can't hold that oil during this month of May where the demand has gone down so low. But what does this all mean for the economy? Basically, we don't really know because we don't know when the lockdowns in all of these countries around the world is actually going to end. This could continue for multiple months or it could finish in the next month or so, but everything is just so unknown. And this all comes back down to this whole unprecedented time. But then what does this mean for the stock market? Now, I've heard some people say with oil trading at a negative value, this is the time to just jump ship and get all of your money out of the stock market. Now, why would you really do that? Because do you think that the oil price going to a negative value means that your tech companies like Apple and Google are going to also become bankrupt? Not quite. It doesn't really work in that kind of way. However, it does mean there is a lot of unknown in this world. There is also a great chance for you to pick up a great deal on some of the oil companies in the stock market, such as BP, Shell, and Exxon. So being an absolute novice in the stock market, I'm personally going to buy a very small amount of BP stock shares because it's at such a low value and I feel like that they're going to go up later on. However, it's very hard to really tell what's going to happen with the stock market right now because there's so many things that's happening that's just never happened ever before. So I hope you've got an overview of how the crude oil industry works and you kind of understood a little bit as to why West Texas Intermediate was trading at a negative value. So if you like this video, hit the subscribe button and the bell so you get notified when the next video gets posted up. And don't forget to like, share and comment.